So welcome, guys. If you're here for the Norada Capital Management webinar, you're in the right spot. Um, my name is Nathan Hall. I've got with me our founder and CEO, Marco Santarelli. Many of you guys probably have listened to his podcast, or you might be brand new to our companies for the first time. That's okay too. You're here to learn. You're here to understand the investment, the options. And so a couple ground rules for this call today. There is a Q&A box that you can click on. That Q&A box allows you to ask questions. Normally we get to the questions, the Q&A, towards the end of the webinar. Sometimes if a question pops up that's kind of pertinent to what we're talking about, if we see it in the moment, we may answer it, but usually we like to reserve the Q&A towards the end of the webinar. There's also a chat box, right? And the chat box is there to put in links to maybe one of our businesses, maybe to our investor slide deck. We like to put links in that chat box, or we can actually chat everyone at the same time, so you can see, the validity and what goes on within these companies. So that's it. A couple ground rules. Again, use the Q&A box to raise your hand, ask a question. We'll try to get to all of them. Sometimes we have a lot of questions, so we don't ever get to all of them. But to kick it off here, my name is Nathan Hall. I've worked with Marco 3 or 4 years now. I've been in the investment real estate world, in the private money lending world for over a decade. I've seen thousands of transactions. I've seen millions of dollars raised. This is kind of the world that I live in, right? And I've seen Marco grow and expand his companies, his brokerage. We'll talk about a little bit about both companies here in just a second. But it's been quite unique to watch this grow. I mean, we're continuing to explode right now as well. The companies underneath Norada Capital Management. Really, that's from the support of you guys as investors, as accredited investors. We raise capital to grow and expand the holdings that we have. That wouldn't have been possible without you guys. So we will talk about the investment here today. I've got some screen pulled up here. But before we do that, Marco, the usual, if you want to give a 30-second to 2-minute elevator pitch on your background, how you got started, that would be great.
Yeah, thanks, Nate. Yeah, your opening description here was awesome. It was very very well said, and very, very correct. I've been an entrepreneur since I was a teenager. I got involved in real estate investing when I was 18 years old, so I've been in the game for a while. Bought and sold real estate, invested for a long time. I've been involved in multiple startups over the years. And 20 years ago, I started Norada Real Estate Investments, which is one of the largest providers of turnkey rental properties in the country. We are in about 25 markets, very active in about 9 or 10 of those markets.
Mm-hmm.
And that company from 20 years ago is a complete end-to-end solution for investors looking to invest in turnkey real estate, with a team and a counselor that is available to you all the time as your primary point of contact. So we've just made it very easy to put it all together for you. And then on and off through the years, I've been investing in different business ventures and raising capital on and off with promissory notes, and then ramped that up in 2015 for 3 years in the real estate space. And then from there, ventured out into some e-commerce business endeavors that are still part of our portfolio today with Norada Capital. And you'll recognize many of those name brand businesses. But that was kind of the start of Norada Capital, is in the e-commerce space. And then we built on top of that with business partners of mine, Eddie Wilson, Andrew Cordell, where we thought, hey, let's rebuild something that was being done pre-COVID, an educational mastermind that we now call Money Is. And then in parallel with that, there's a real estate mastermind called Level Up Real Estate. And so those are the two big educational masterminds that we're building now and have been building for the last let's call it a little over a year now. And they're really gaining a lot of traction and momentum at this time, now that we've passed the 1-year anniversary mark. But we started working on this over 2 years ago. And anyway, that's all part of Norada Capital, which is the investment fund that we're talking about today. I could go on wider and deeper, but Nate, that's your 2-minute overview.
Love it. Yeah.
Go with that.
You've gotten pretty good and concise at that. Yeah. And so Norada Capital and Norada Real Estate are two big companies that Marco formed. Norada Capital and Norada Real Estate don't really cross paths. I mean, they're two separate entities, but when you start doing some more research on who we are, who Norada is, you'll run into Norada Real Estate quite a bit. I mean, we've been around 2 decades on that side. we've been doing note raises, by the way, for over a decade, since 2012. This particular offering has been around since 2020. I mean, Marco established the acquisition of, I think, your first e-commerce business probably 20 or 2019, somewhere around there. And then it kind of blossomed into, Norada Capital and acquiring more companies. So Norada Capital Management acquires companies. We grow those companies through the use of private raise. And that's what we're going to be talking about here in a second. So Marco, do you want me to, since we like to kind of go back and forth and how we, portray everything, do you want me to share my screen here so we can kind of go through the typical, what is a promissory note, what the actual rate and term is, things like that? And I actually, what I did today as well is I pulled up an example of the promise note itself as well, so you can see how easy the actual document is, the where you put your title, the amount, the interest, things like that. So as you go through the description, I can share my screen and show a couple of things if that works for you.
Yeah, that's a great idea.
Cool. Yeah, so look, we always kick this off, guys, with the simple explanation. Marco has a really good job. If you listen to the podcast, by the way, Marco does a great job at taking really what can be sound complicated concepts and makes them very easy to understand, right? It's the same thing with a promissory note. It's not super, it's not a super difficult investment vehicle, but it depends on the type you're doing. So Marco, if you want to take maybe a few minutes here and explain what a promissory note is, why you chose to do promissory notes for the raise, that'd be a great place to start. And I'll share my screen here to show some more things for our investors. So
yeah, so a quick summary or overview of a promissory note is this. I say this every week, and for you, if you've been on one of our webinars before, you've heard me say this before. A promissory note is nothing more than a loan agreement. It's just an agreement or a contract between two parties, a lender and a borrower, and it lays out the terms, the start and end date of that loan, the terms, meaning the interest rate being earned, and the payment frequency. Is it, a balloon payment at the end? Is it paid monthly, quarterly, annually, whatever it may be? Those are the basic terms. There might be other things in there as well, but that's the basic structure. So if you've ever been involved in a student loan or a signature loan, a car loan, anything like that, they're all done on promissory notes. It usually says promissory note at the top, or it might just say note, or some other title, but it's all the same instrument. It's a promissory note, and that's all it is. And so we use that to raise capital. Companies and corporations that are raising capital to do it one of two ways. They either give up equity, share equity, meaning they sell equity in exchange for that capital, or they raise capital in the form of debt, which is what the promissory note is for. And so they raise capital one of two ways. And there's, they have advantages over each other. It's just a matter of what, the business strategy is and, what they're trying to achieve. So the promissory note is nothing more than a loan agreement that, companies use to raise capital. It could be lending institutions, whatever else it may be. And that's all we use as the promissory note. We haven't issued, any equity to date. The idea has been kicked around. That might happen at some point in time, but as of today, it's just, debt capital that's being raised. So that's what it is, Nate.
love it. Yeah. And if you could enable my screen sharing real quick, that would be great. So I can show the participants here. But yeah, the way you explain it's perfect. I mean, I've been in the real estate world for a really long time, and I've done rehabs and wholesales, and I've lent private money, et cetera. And it's the same thing when you're becoming a private money lender on real estate. It's a promissory note. If you're becoming a private money lender to Norada Capital Management, it's a promissory note. I'm going to actually share it real quick with you guys to show you kind of the simplicity of it. So Marco, can you see my screen okay?
Yep. Yes,
okay.
I can.
Yeah. So guys, this is literally the note that we send you when you guys want to get started. So you can see here, there's titling, there's address, there's a principal investment amount, there's an interest rate, right? There's the beginning payments. There is if there's a bonus, there's a maturity date, and that's it, right? It's you guys provide us with, obviously the disclaimers here, and there's a very large document. And mind you that lawyers write this, so it's like it looks like everything under the sun. They have to disclose everything. So, the last part of this is you letting us know where you want us to pay. Give your distributions to, and then obviously the correct tax information, so we can cut you the correct tax information at the end of the year. Other than that, everything else is here. It's almost like a PPM here that goes through, just disclosures, use of capital, where we're placing that money, things like that. So it's pretty basic document, guys. It's money in versus money out. And then as far as the actual offering goes itself, this is the investor slide deck here. Marco, do you want to walk through the actual note terms and the actual offering real quick?
Yeah, it's pretty straightforward. So you have a choice of the term of the note. In other words, how long you want that note to pay you distributions
Right.
based on that 12 or 15% interest rate. And the shortest note we offer right now is the 3-year note. You could do a 3, 4, 5, 6, or 7-year note. It's your choice. You just let us know up front, and that's how the note will be written up for you. The note rate is a function of the invested capital. So if your investment is up to $100,000, it's 12% per year and paid monthly. And then if you're at 100,000 or above, it's 15% per year, again, paid monthly. Some of our investors, a good number of them, but some of them are invested either at, upfront one time or over the course of months, invested at 200,000 or more. And at that point, you're still receiving 15% per year. But as a pot sweetener, if you will, there's a 5% bonus interest that's paid on the maturity date of that note. And so if you're a $200,000 investor or greater, you get an extra 5% when the note matures. And that just simply means that your principal's repaid, at the final month of that note when it comes due, when it's matured. The minimum investment currently is 50,000. It's been like that for 4 years. We've dabbled with 25,000. We found most investors don't even touch the 25,000 investment. And then distributions go out at the beginning of each month during that first week when you're set up on the auto pay or direct pay system. And that's it. I mean, those are the tiers. It's 12% or 15% based on the principal amount, and you choose the term.
Yep, it's super simple. It's really one of the most passive investments I've seen ever. It's as simple as a contract, signature, a wire transfer, an account verification, and then it's kind of like an annuity payment, right? Every month you're getting a paycheck, right? Back to either your self-directed IRA, your solo K, your business, your personal checking account. And by the way, these are really good for retirement account investors. We have I'd say 50% of our clients are self-directed IRA investors, solo 401k investors, clients that have either old 401ks that they've rolled over, or they have IRAs that aren't performing to where they want them to, and they roll those over, and it gets that capital working for them. Now, as I'm looking to my right here at the screen at the note, one thing that you do want to understand is that term, like when you choose that 3 to 7 years, you do have to be what's called an accredited investor to work with us. We're what's called a 506C Reg D offering. So per SEC regulation, we have to acquire what's called a third-party verification letter. I call it an LOA for short, a letter of accreditation. So there's three main things we need, or commitments from you to get started. One is the letter of accreditation. 2 is the minimum investment of $50,000, and 3 is the term, right? It's a minimum 3-year offering. So that means you're committing to invest with us for 3 years, receiving those interest payments for 3 years. And at the end of those 3 years, it's just a simple return of principal to you, right? So let's just say you do a 3-year note for $100,000. That's 15% annually for 3 years. At the end of those 3 years, that's 36 payments. We pay your 36 payment, then return your principal to you. So, and over the years, I mean, we've been raising capital for, well, four or 5 years now, Marco, and we've had a lot of investors that have been paid back in full. We have a lot of investors that have rolled their notes over into another 3-year commitment, right? So, if we're raising capital at that point over that, you do a 3-year commitment, you can still have the option to roll your note over. So, pretty simple here. And Marco, I believe you have the ability to, I don't know if I have the ability to, but in the chat box there, I can chat to the host and pin this. Oh, there we go. I'm a co-host now. So guys, this is the link. I just put it in the chat box for you. That's the link directly to the investor slide deck. So that's going to take you through the investment promissory note we just covered. It's going to take you through the actual companies in the promissory note, which I'll share here in just a second if we want to just continue on with the screen share. So far what we've covered is the basics of a promissory note, what the terms, the rate, the interest rates we pay out, the minimum investment, the minimum term, the accreditation process. Now, I think what's important for everybody is what backs the investment, right? Everybody wants to know, okay, so if I invest $100,000, where's it going? And that's where we'll go to next. We'll go to the different companies, and I will scroll down here, Marco, so we can
Mhm.
start with the e-commerce side. And you do again a great job at explaining the e-commerce businesses. Before I do that, is there anything else you want to add to what I just said?
No, but don't give yourself a lack of credit. You do a great job explaining everything too. So it's not just
Yeah,
me.
yeah, I appreciate it.
Yeah.
All right, so let's do this, guys. We're gonna go into the current holdings. All right, this is what. And quick backstory, Marco. Don't mind if I step on your toes here.
Yeah, no, go for it.
Marco started this on his own. A lot of people. I love it when investors ask me, "Well, does Marco invest in the fund?" I said, "No, Marco started this with his own capital." Right. So when you're seeing these businesses and we're walking through these offerings, these are companies that he is equity owner and partner in. Right. This is not us raising capital for like a third party. These are his companies. So he started these on his own and then realized, there was an opportunity to grow and expand the equity position and the partnership position in these. So that's when the fund kind of blossomed. So, if you're wondering if Marco has taken this 100%, these are Marco's companies. So I just want to reiterate that because a lot of people get that confused. So feel free, Marco. I know there's three main backings of Norada. We'll start with e-commerce if that works for you.
Yeah. And what do you want me to do? Just cover the backstory or what that category
Yeah.
is?
What that category is. Typically, you do a great job about explaining the first acquisition of e-commerce and then
Yeah.
how it got started down
Yeah.
in Norada Capital.
Yeah, okay. So there's three basic categories of what we focus on and invest in through Norada Capital. The first is where we got started, and that's e-commerce based businesses. It really actually started with MentorBox, which is something that we are now rebooting, we're reviving. I was talking to my partner Raj a few weeks ago, and we're now kind of putting some extra focus on MentorBox, hiring a staff of 2 or 3 to drive new content because we still have, I forgot how many it is. It's 5 figures. We have monthly paying subscribers to MentorBox, and I don't remember how many thousands of people it is, but it's 5 figures. It's a low 5 figure number that pay like whatever it is, $10 a month every month. So it's a cash cow business because the overhead is so low. It's really just online product where it's delivering content, just like a audiobook service like Blinkist or anything else like that. But there's videos with the authors, and there's all kinds of video content. It's not just audio content. It's a great idea that was the brainchild of one of my ex-business partners. And that's where we started. We started with non-name brand businesses, which was MentorBox. And then from there, this opportunity came along to acquire the intellectual property for Dress Barn. Long story short, we made them an offer. They accepted it. It went through the formal federal bankruptcy proceeding, the Chapter 7 bankruptcy proceeding. And no one showed up to the auction. We were essentially named the stalking horse bidder, and we took possession of their intellectual property. And what that means for those of you that don't know is we took ownership of the trademarks and the brand name, which come with brand equity, the customer database that we can market to and advertise to, and leverage,
Mhm.
and of course the domain names and the website, which we immediately rebuilt and remerchandised and just have an ops team that manages the product and the inventory. And so that was uh, uh, that playbook that we created with Dress Barn worked so well that we thought, yeah, this is worth pursuing with others. And so we went after Pier 1, which also filed for Chapter 7 bankruptcy. And they had, I forgot how many stores, but let's just say over 1,000 stores around the country, probably a lot more than that. And that was being wound down. The stores were being closed, the staff was being laid off, and inventory was being liquidated through the trustee. So we made them an offer, a much larger offer than Dress Barn. And that was capital that we raised. This was the time of Norada Capital. This is around the time when Norada Capital was launched, is because I started investing in MentorBox personally, and then when Dress Barn and Pier 1 came along, I realized, man, we're not talking hundreds of thousands of dollars, we're talking millions of dollars.
Mhm.
And so to grow and scale, just like a real estate syndicator does with a large apartment building, they they work the deal, they find the deal, but then they bring in limited partners or LPs in to raise capital to do those bigger deals. This was the same principle. And so to go after Pier 1, we needed a lot more capital, like millions of dollars. We ultimately acquired Pier 1 for in total for $31.5 million, the intellectual property. And I know I'm dragging this out a little bit, Nate. It's kind of the long,
Great. No, I love it. I think it's a great backstory. Yeah.
yeah, it's the longer story, but and I can go deeper into it, but I think this covers at a higher level what's going on. So we did have a competitor that came to the Pier 1 auction. They caught wind of what we did with Dress Barn, and they realized, oh, we were going after Pier 1 too. And so I don't know how they found out, but they showed up at the courthouse, if you will. This was during COVID, so it was actually online. It was virtual. It wasn't at the courthouse. But they started bidding up because we made them an offer for $21 million, and then they started going up at $500,000 blocks. And so we kept, going up half a million, half a million. They ultimately stopped at 31.5 at our bid and backed down. And so fortunately, we took possession of Pier 1, and they own probably close to 200 trademarks. So we own all those trademarks, plus the Pier 1 name, and again, the brand equity that goes along with it, their customer database, which is millions of people, the website and URLs and whatnot. So, we own and operate Pier 1 online today. We have, I can't remember what the traffic was. I was just talking to Raj the other day about this. I think it's 30, don't quote me on this. I think 30,000 visitors a day that are hitting the site. And a lot of those are buyers, they're shopping. So don't quote me on that number. I actually have to go back and get those stats because it was kind of interesting. I was just talking to him about like a week ago. But anyway, so we operate Pier 1. And then we just can continue going. There's linens and things, then Steinmart and whatnot, models. Bodybuilding.com is a monster, a beast of a business. It has I forgot how many millions of visitors a month. I think it's
4+.
I think it's 4.8 million visitors a month, and that sounds low to me, but I should compile all these stats and just share them with you guys, Nate. But anyway, it's a beast, and that is a unicorn business. That we will turn that into a $1 billion business. It might take 5 years. We think we'll do it in 3 to 4, but it might take 5 years. But it's a national brand. It's a national business. It has a lot of traffic from all around the world, and we can monetize that in so many ways because it's in the health and bodybuilding space, which is a multi-billion-dollar industry. But all these companies together form what I call the e-commerce businesses. They're all online. They're scalable businesses. We're operating all of them right now debt-free. It didn't start that way, but they are debt-free today. And so now we are in the process of onboarding a high-level ex-CEO of a publicly traded company that is familiar with the online e-com space and is excited to work with us in rebuilding these businesses back into billion-dollar businesses.
Yeah.
And so that's happening as we speak. It's pretty exciting. And so that's the first category, the e-commerce businesses. So this is where we started and we are continuing to focus on.
Yeah,
Any questions?
no, I think it's great explanations, Marco. So, when we're creating the promissory note, I just want to clarify something. Let's say, for example, we do a $100,000 note with you. The note is tied between Norada Capital Management, which is the borrower, and you, the lender, right? So we're not going to attach your note to one of these businesses, one of these brands. I mean, some companies do that. Some companies raise capital for a specific company or specific deal. In this case, your note is underneath Norada Capital. So you have the benefit of multiple businesses backing that note. Okay. So it's not like we're tying your note to Ralph and Russo or Franklin Mint. It's got the backing of all these businesses that Marco's going through right now. So John, great questions, man. We're going to get to your questions. You've been firing them in here. So just give us a second. We'll get to them eventually. So Marco, if you want to go into the mastermind space,
Sure.
which is a super exciting space, just personally for me, I've been in that space, in the past life, and it was an amazing experience. Educationally changed my life, right? So that's what these businesses are doing. They are literally supporting with mindset growth, business growth, investment growth, real estate growth. So if you want to talk about Aspire first, Marco, I can also pull up the link here. I have it shared. So that'd be a great place to go to next.
Sure. Do you have your screen full on, like, or I don't know why on my end, maybe it's just on my end, it doesn't look like it's full screen. Maybe I have it shrunk down. So
Yeah.
yeah, so I'll kind of go, I'll kind of give a little bit of a backstory on the educational master, what I call educational masterminds. So two of my business partners came to me almost 3 years ago with this idea of the money is mastermind, and we were discussing it and figuring out, okay, how are we going to rebuild something that my partner Andrew was doing years ago. And by the way, I just got confirmation this morning that my partner Andrew with Aspire Money Is and Level Up will be on next week's webinar. Same time, same place, next Wednesday. And so it'll just be him and I, and we'll just be talking about, the backstory of Money Is and Level Up and Aspire and what we're doing there. But so the quick backstory here is, we talked about Money Is and building it as a rebuilding it, what was once being done under a different name with a different company, and that Andrew was kind of the spearhead on. He was the #1 stage presenter for the company. We wanted to take that same concept, but 10x it, do it much better and on a bigger scale. And that's what Money Is. It's a mastermind that provides high quality content on a weekly basis to its members with 4 live events a year, among other things, opportunities to be presented to private placement opportunities and other investments for our members only. And so Level Up Real Estate is the sister company to that. It's basically the same concept, almost identical, but for the real estate investor and for those who are interested solely and specifically in real estate and want to deep dive into real estate. But the concept is the same. Lots of value, lots of content, lots of community, because you're going to be with hundreds of other like-minded individuals, both online in the app and in person. So there's a lot going on, and there's a lot of value there. We have staff that handles every single aspect of those masterminds. But how do we get people to those masterminds? We do that through a massive monthly event called Aspire. Aspire is what we call the Aspire Tour. Nate just put the website on the screen here. And you can visit that at aspiretour.com. And every month in a major city, we put on a large event. That event can have 2,000 to 3,000 to 4,000 plus people at that one-day event, which goes from 7 to 7. That we kick it off at 8, the doors open at 7, but we run it until about 6:37. And we always have, the most amazing content providers and speakers there, whether it be Marcus Lemonis from The Profit, and he has 2 shows now on CNBC, Kevin O'Leary from, Mr. Wonderful from Shark Tank. We've had Robert Herjavec as well, Mark Cuban. We've had Barbara Corcoran. We have Tim Story. We have, of course, my partners Eddie and Andrew are always on stage, talking about the things they talk about. We've had Sarah Blakely from Spanx and her husband Jesse Itzler. It's just always a great group of presenters. For our New York event coming up in a few months in July, we have Martha Stewart. We have David Goggins. David Goggins is actually at a lot of our events now. He seems to be more and more of a regular. But yeah, we locked down Martha Stewart not long ago. So she's going to be at our New York event. But, these are impressive. And if you really want to get a taste of what they're like, if you're on Instagram, or maybe sign up for Instagram, but just go to Aspire Tour, one word, on Instagram. And we put out some really, really good quality content every day, sometimes multiple times during the day, for you to see, what we're doing and how that's all unfolding. So anyway, it's an amazing event. It's a high quality, high production event, lots of energy, lots of great people, lots of great content that we present, and we expose people to our ecosystem. So from the Aspire event, we drive them to our masterclasses, our 2- and 3-day masterclasses, whether for Money Is or real estate on the Level Up side. and they're drinking from a fire hydrant at those two events. You know, they're going to get a lot of education and a lot of value for a very low ticket price. But what they realize is there's so much more to gain and learn, and they want more. So we convert at least 20% of that room to members of our Money is Mastermind, Money is or Level Up. And so that's where we monetize this business model.
Yeah. And the
I
Pull Up
know
Money is here just to show people if you want to go to the website, you can see this is one of our mastermind websites. So, yep.
I didn't know. Okay, they keep changing. You know, it's great. We've got such a brilliant team of marketers and designers and whatnot. And this is actually the latest
Yeah.
iteration of the
Yeah.
website. I know that they keep changing so many of the websites that we run,
Yeah.
but
I
this is
noticed that
great.
too when I pull it up. Yeah. It's actually pretty unique. I like the way it all flows. But yeah, this is one of the masterminds on the financial education side. There's an app, there's live events, there's online events, there's all this content that's provided. So pretty unique option for a lot of investors here. But yeah, it's definitely a different website here, Marco.
By the way, that backdrop that you see on the screen right now is
Yeah,
actually is an actual picture of, I think, of our last Money is event. So you can just see, you know, the size of the room and the size of the stage and the screens up on top, the LED screens and
yeah,
whatnot. There's a lot going on. There's just so much good
yeah.
at play.
Well,
So,
I'll pause it here again. I just want to give people an understanding of one of those educational companies and mastermind companies. So really unique speakers. See, the education content there is really good. So again, someone who's been in the space before, uh, really good content, really good education. So, all right, Marco. So we're gonna swing down to, I know that there's the three major parts.
yep.
There's commerce, there's mastermind education, there's Broadway, right? Which is an eclectic, unique part for me as well, because my family is musical. So I'll share the investor slide deck again here, and we can jump into that if you'd like.
Yeah. This one is just brief.
Yep.
So I think there's a total of maybe 12 or 13 productions now that, you know, we've got our foot into, our hand into. Um, you know, some of them are past, some of them are present, some of them are, you know, future. But this makes up a very small percentage of our holdings, so it's not a big part of the fund, but it's something that that I love and enjoy. Nate also loves and enjoys. It's a
Yep.
way to give back to the community and the arts. I think, you know, the world is a better place, as my partner Ken Davenport likes to say, is, you know, the world's a better place with, you know, with live theater, with, you know, more arts and theater. And I agree with him. And so we do support that. But, you know, it's not a charity, it is an investment. So, you know, we're not doing it just for the love, we're doing it for, you know, for the returns. You know, the last production that we're putting our toe into, it has an expected ROI of over 60%, you know, which is a great return on investment. So, you know, when we can, and that's in less than a year too, by the way. So, you know, when we're, you know, paying 12 or 15% on our notes, and we're recouping the investment as well as making a 60% return, you know, it's a nice arbitrage play. Anyway, so these are just some of the productions. You know, there's the Neil Diamond musical. Tommy opened up last month. That's based on the Who's music catalog, but it's a great production and whatnot. So
Hold up this as well, Mark. This is Neil Diamond's musical has blown up the last year and a half. So if you guys want to check out one of the musicals that we co-produce, you can go here. Right, really unique production actually. So um,
so that's now going on tour. There's a
yeah,
24 city 2 year traveling show that this is now turning into. And we're probably going to open it up in another city as well, internationally. So,
nice.
so there's a few things going on with this one.
Love it.
Yeah. So anyway, that's a small portion of the fund. So Norada Capital, you know, likes to be involved in Broadway production. By the way, as a fun fact, just kind of a side note for those who care or are interested, maybe Nate, you don't even know this. So of those productions, three of the four of the productions we're involved in have received last week a Tony Award nomination. So there, four of them are up and running for a Tony Award.
So cool. Yeah. Yeah.
I laugh. I'm only laughing because it's hilarious. I never thought I would be talking about this like 4 or 5 years ago.
Right.
So
Well, what I think is unique about it as well is that the investments in the musicals for I think for you started as a passion project too. Like you actually are someone who loves the arts, right? You know,
yeah,
it's not just about the investment, the capital that can be made. You're a Tony Award voter. You love the arts. You know, you're passionate about it. So I like that. I like that a lot. And as an investor, you're passionate about obviously entrepreneurship and business growth,
yeah.
period. But this is a unique, eclectic piece of Norada Capital. So
Yeah,
we're a
and
big
just real
fan.
quick, just
Yeah,
10 seconds, 15 seconds. I don't know if I told you this, Nate, but just as another fun fact, how I fell in love with it was about 28 years ago. It was really the first theatrical production I went to or attended, and it never even crossed my mind to go. It was my girlfriend at the time who took me, but she took me to Phantom of the Opera.
yeah,
And I was like, wow, that was awesome. Like I
yeah.
just was hooked on every song. And that's when my love for, live theater and musicals specifically uh happened. It was just that event.
You know,
So,
it's funny you said that. You actually never told me that story. My father was a music professor at the University of Maine for 40 years. And the very first musical I went to at the University of Maine, I was probably like 6 or 7 years old, was a production of the Phantom of the Opera at the Maine Center for the Arts, University of Maine. And my dad was in the pit orchestra. So
oh, wow.
that's unique. Yeah, it's funny you say that. So yeah, and then it was
Well,
West Side Story, and I fell in love with West Side Story all over again. So West Side Story is probably my favorite musical of all time.
well,
Which I
I'll throw one more on the pile. How's that? Just
go for
one
it.
more fun fact. So
Sure.
how I got involved in the business side of this, I think you know this, Nate, but I guess for the people who are attending this or watching this video, or this webinar. It was in one of my masterminds that I belonged to for many years, almost 8 years, called War Room. Not one of ours. We owned Power Room, but I was in a mastermind called War Room, and I was just sitting next to this guy. His name is Ken Davenport, and we didn't know each other. But we got talking, and he kind of fell in love with what I was doing on the turnkey real estate investment side. And I asked him, well, what do you do and stuff? So he started telling me that, well, I'm a lead producer on Broadway. I go, oh, yeah, that's interesting, So we just got talking. He told me a little bit more, a little more. And then I started prying for more information because I thought this was fascinating. And then he was telling me about one of the projects he was working on, which is Broadway Vacation, because he just got the rights from Warner Brothers to produce, National Lampoon's Vacation movie franchise as a musical.
Yeah.
And I thought, oh, that's pretty interesting. I might be interested in doing that. So, one thing led to another, and we, started building a relationship and then a friendship, and then I started investing with him. But it turns out that Ken was, for I think a 4, maybe 5 year period, the executive director for North America for Andrew Lloyd Webber. So he was
Wow.
basically Andrew Lloyd Webber's right-hand man for North America for all the Andrew Lloyd Webber productions, which includes Phantom of the Opera. So how was that for like timing, like right place, right time? This
Sure.
person for the production I first saw 28, 30 years ago, and that, made me fall in love with live theater and musicals.
Yeah. That's so unique, right? And I
Wild.
that's what well, it's funny it kind of ties into masterminds in itself and just and the networking and the meeting of people, right?
Yeah.
That's you'll be amazed at the people I've met over the years that have, attended a Money Is or an Aspire or gone to a networking group, and it's the ties between everything is unique. And there's probably stories like that behind all the companies that you own
Yeah.
now. But yeah, great story, guys. And you can tell Marco and I like to chat a little bit. It's not all business here. We like to be professional but laid back as well. So
Yeah.
thank you for listening to our stories here. We can get to some questions. I know Mark, you had a hard stop at the top of the hour. I do as
Yeah.
well. So
We're good.
John's got about 1,700 questions here that we can go through. Just joking, John.
Go, John.
So we appreciate the interaction there. So we'll go into some questions, guys. If you have questions about the fund, the offering, we're going to start answering them here. We do some live Q&A. This is what this is for. So Marco, do you just want to start top down? I think that's a good starting question from John there.
Yeah, actually, if you don't mind, I'm just going to start with Sonia.
Oh,
at the very
sure,
bottom,
sure.
and then go right to John's at the top.
Perfect. See that.
Because the first one that caught my eye. So Sonia, I'm not sure how you pronounce it. And apologize if I pronounce it wrong, but hi, Marco. What is the estimated debt to equity ratio in the Norada Capital Fund? Great question. On the January balance sheet, which is being updated, I believe this week, but this month for sure. I have a meeting with Sean, our bookkeeper, to update that. It's about a third. So the debt to equity ratio is about 1/3, 33% in that. And so that's a very good question. So yeah,
Yep.
the company in the balance sheet is equity rich, which is a great position to be in, and that continues to grow each and every quarter. And this is actually a very exciting year, 2024. By the end of this year, we're going to have some very interesting events happen. One, I'm under an NDA, I can't actually mention yet, but it's pretty exciting. So I'm looking forward to 2024. I'm not in a rush to get to the end of the year. I don't want time to go by any faster than it's going right now, but it will be it'll be a great year for the company. All right, so John, how many times have interest and or principal not paid on the promissory note on time? Never. Knock on wood. So far, we haven't had, a catastrophic event or a setback or an economic, mishap or collapse or anything like that to impact. I mean, COVID was an impact, it did impact, revenues and whatnot. It hurt a lot of businesses, but fortunately created opportunities as well. So, it actually helped us in the e-commerce acquisitions because it further hurt businesses that had retail stores that had, brick and mortar stores. It impacted a lot of businesses. Many of them had to close, but at the same time, it forced a lot of people to go shopping online. And so if you had an e-commerce online presence, it probably helped you. And so, it's a two-edged sword. It worked for us and against us, but it certainly hurt a lot of businesses out there too. So
And it's just to back up the second part of that question, the on-time piece. I mean, if the usually we pay out the first week of every month. Now, sometimes a bank can be finicky if they see a lot of ACH going out, or if the payments go on the second and that second happens to be on a Saturday, right? Maybe you'll get your payment the fourth or the fifth, right? But as far as what Marco just said, it's very true. So as I can speak to this next one in terms of the IRA, the brokerage piece that John asked about. So, John, first and foremost, we are not a custodian of self-directed IRAs. So we can help you find a good custodian if you need to do like a rollover. We can help you find a good custodian to do a rollover to a self-directed IRA and create that Roth self-directed. There are a lot of custodians that do it. You go Google it, you'll find 100 of them, right? The biggest ones are Equity Trust. They are Horizon Trust, Specialized IRA. There's a lot out there that we recommend. So if you need to do a self-directed IRA, just get with me or get with your investment advisor. There's going to be tons of emails from us that you have. You can go on noradacapital.com, raise your hand, but I've made note of your name as well, so we can pass that along. Again, as far as the actual, fees for setting up an IRA, I don't know what that would be at this, everybody custodian account's different. Your IRA, you said your IRA is at Fidelity. No, Fidelity is not going to allow you to do a promissory note inside their structure. We can't write a note to Fidelity IRA. It'd have to be rolled over from Fidelity to a custodian that allows promissory notes. I mean, Fidelity might allow some secondary investments, but mostly Fidelity is going to have basically an umbrella of what you can invest in within that IRA. Promissory notes are typically not one of those. They're a private investment. It's a secondary. It's not private play. Well, somewhat like private placement, but it is a, what's the word I'm looking here, Marco? It's not a publicly traded fund or anything like that. It's a note. It's a loan agreement. So Fidelity probably wouldn't allow that. So
some custodians, and I'll say that in air quotes, tie your hands behind your back. They'll just give you their own menu of investment options.
yeah,
And they don't let you truly self-direct. They let you self-direct within their own menu or ecosystem, but not like gold, silver, oil companies, private placements,
yeah.
private companies, real estate, stuff like that. So it's unfortunate because, you should be in control of your own retirement fund. But if you're with Schwab or TD Ameritrade or, some of those other companies that, they're not going to allow you to do that.
Yeah. And I'm just replying to one of his questions here that so you can have an actual physical place to go. Let's see.
Are you still answering a question?
Yeah, he asked about Vanguard or Schwab as well.
Oh,
And again, same thing. They're big banks, right? Big banks typically aren't going to allow you to invest in a note inside their options.
yeah.
Um, Another great question. We get this a lot, Marco. People ask about, well, why not go through banks? Why not raise money through Chase or B of A? Trust me, and I'll speak from a personal experience. I've done a lot of real estate transactions over the years, whether it's rehabs or acquisitions of 3 or 4 units, including here in San Diego. I cannot go to Chase and ask Chase for a private money loan of $800,000 or $1 million or 5 million acquisition. That's not how it works in the private world, especially when you're growing and scaling a company or growing and scaling a business. Banks lend money, and Marco will say this as well. Banks lend money to people who really a lot of times don't need it, right? So syndications, companies you're growing are going to raise money privately. A lot of times people do it through parents and friends and doctors and lawyers, right? You're becoming a private money lender. In this case, it's an actual real fund, right? It's a 506c Reg D offering. We are filed in the Edgar system with the SEC, so we can raise millions of dollars through accredited investors. And it's 12 to 15% because you want to be competitive in this space, right? It's a private money rate. It's a hard money rate. You're not going to go to Chase and raise $20 million in a year. So and Marco, you do a great job at explaining this as well. So feel free to support me in that.
Yeah. I mean, you basically summarized it, but banks have a very, very strict criteria as far as who they lend to. If you don't check all their boxes and fit inside their lending box, they're not going to lend to you. They're not in the business of taking risks. They want sure bets. So they're going to lend you money when you really don't need it, because you have a successful company with a long history, and you need more operating capital or marketing capital to grow to another level. So they know they have a lot to fall back on. But that's when they're going to lend to you. And even then, it's somewhat limited in how much they do lend. So that, show me a small business or a medium-sized business that has gone to a major institution or a bank, like a lending institution, like Chase, Wells Fargo, Bank of America, that has gotten like any kind of significant loan. I mean, they have small business loans and whatnot, but often those are going to be SBA loans. They're going to be small
Yeah.
business administration loans, and even those are easier to qualify because the SBA is actually promising to back that loan for the bank. So the bank is not losing anything. It's risk-free loan for them. It's the government that's actually lending you that money or backing it for you. And those are limited in what size you can get as far as a small business loan. Hence why it's the SBA. But yeah, most companies that are growing or in their second or third round of capital raising are doing it through private placements. They're either selling equity and raising capital that way, or they're raising debt capital through the use of promissory notes. And that's just how corporate America and businesses do it. It's even around the country. This is how just businesses launch and grow. So
Yeah. I remember one of the first deals I ever did in the real estate world. I borrowed hard money, and it was like 11% and 2 points, right? And it's just that world that we live in is very normal. Like 12% is actually pretty normal for a promissory note offering. There's other higher risk stuff out there where you can get 20, right? I'm not saying that's for you guys for us to lose business. We're just being open and honest here. So another good question, tax documents. How do we send it out at the end of the year? It's 1099 income, right? So we're going to send you guys a 1099 either to your business or you personally. If you're using a self-directed IRA or a solo 401k, then we are not going to be sending you a 1099 because your self-directed IRA and solo 401k don't need that. So pretty good question there. Simple answer. John, good question again. Where are your bad reviews? I'm not sure where you're going with that one, but here's some explanations for you. Norada Capital Management has never defaulted. We've never been in a position where we've had to have a bad review written. So I could send you to any one of my clients in the past few years, and they could tell you, yeah, never defaulted, never missed a payment, etc. If you're looking on the Norada real estate side, yeah, there's going to be reviews where people might have had property management mix-ups, or they might have had, an eviction or something like that. That's part of real estate investing. So I think that ties into what is your Inc. 5000? That's the Norada real estate brokerage, the real estate business that's separate from Norada Capital. So Marco, did you want to speak to that at all?
Yeah, I'm not sure if John's asking what is, the Inc. 5000. I think that's what he's asking.
Oh,
Um,
okay. We can do that too.
so yeah, that's the way I interpret it. The Inc. 5000 is really well, if you're familiar with Inc. magazine,
Yep.
Inc. every year for a long time now publishes the Inc. 5000 every year. And then they publish a magazine, which is behind me. Actually, you can see it on the wall there. It's the top 5,000 fastest growing private companies, the 5,000 fastest growing private companies in America. And it's really just what they do is they look at the overall revenue growth over the previous 3 years, or a 3-year period. And then those that, meet all the qualification criteria and check the boxes to be on that list become part of that 5,000 honoree list. And they're all individually recognized. They have this big gala. They're published in the magazine and on the website each and every year. And then the top 500 of the 5,000 are kind of like the creme de la creme. Those are the ones that are really spotlighted, more extensively, and it's a little more of a prestigious thing to say I'm an Inc. 5000, company, or we're an Inc. 5000 company. But that's what it is. But the list, we're talking, when you look at the top 5,000 companies together, they make up close to $400 to $500 billion in revenue each year. They create almost 1.2 million jobs. It's pretty significant. It's a great credential to be an honoree. So anyway, I don't know if I'm answering your question, but that's basically what it is. And you can just type in Inc. 5000 or Inc. 500, Inc. 5000 on Google, and you'll pull up the website and learn about what it is. And it's all about private companies, not publicly traded companies. It's about the fastest growing private companies in America.
Love it. Yep. So John, correct. Norada Real Estate is the Inc. 5000. Norada Capital is not the Inc. 5000 company. And Norada Real Estate's been around for 2 decades, right? That's one of the main reasons. Could Norada Capital be there in 5 years? Yeah, absolutely. Max had a question about financials on all the companies, i.e. financial statements. Max, we can provide a balance sheet for Norada Capital. We can provide, I know Marco is updating and working on a cash flow pro forma for Norada Capital. Now, as far as like individual statements for each individual company that we're equity owner and partner in, that's tougher to do. I mean, there's multiple equity owners and partners. So to get everyone together to sign off on providing financials for every single one of these companies is tough. They're privately held companies. So technically we don't have to release financials on those. But as far as Norada Capital goes, yeah, we can provide you with some financials coming up here. Sure. Anything to add to that, Marco? Or are you good?
No, you summarized it very well. By the way, just as a side note, that the cash flow pro forma that I've been working on is more or less ready. I'm just buttoning up a few things so that let's just say by the end of the month, you can get that through your investment counselor, whether it's Nate or Michael or John.
Perfect. Sonia, great question. You're looking to get another promissory note made in the near future, longer term, 6 to 7 years. That's fine. Of course, you can do that. And where do you expect Norada Capital to be in 5 years? I love this question. I think Marco does a great job at like vision casting here and like giving us some perspective on, I know that he talks about the growth of some of these e-commerce businesses that are massive and aspire toward. But Marco, where would you expect Norada, or what's the goal, like vision for the next 5 years?
Yeah, so where I expect Norada Capital to be in 5 years is debt free. I mean, we're going to stop raising capital at the end of 2026. So the goal is to get all the notes paid off, as they mature. So if you're on a 6 or 7 year term, that's just going to, be paid off over that term. But we're not going to be raising any new capital in 3 years. The goal is to basically wean that off in 3 years, and then continually just pay off the notes as they mature. which creates an interesting problem at that point, because through revenue from the business ventures and liquidation events like exits, mergers, acquisitions, whatever the liquidation event may be with various business ventures, Norada Capital will be what I'll call cash flow rich. And so the problem is, where do you invest that, that capital, the profits that have been banked, particularly as we get into year 3 and beyond. So as the revenue increases, the bottom line will increase. And that creates an interesting problem, because now you have to reinvest it or do something when deployed. Now, granted, there's going to be a chunk of that. And this is something Eddie and Andrew, my partners, believe in and we donate to nonprofits and charitable organizations like the one we've set up called Impact Others. You could visit it at impactothers.com. But we're already contributing with some of the business ventures, but ultimately all of them, 10% of the profits going back to impact others, to help people with, clean water, food, entrepreneurship, schooling, and I forgot the 5th pillar of that. It's on the website. Just slips my mind. Endowments and whatnot. But yeah, some of that's going to go towards nonprofits. But in 5 years, the company will be cash rich, debt free, or very close to debt free, other than the remaining notes. And will there be other business opportunities or ventures that come along? Probably. Do we need to raise capital for that? I don't know. Maybe. But it'll be a different scenario and a different game in 5 years from now. We'll be in a position where we've got capital to really do some more exciting things with. Right now, we're launching a lot of rockets, and we're going to get them in orbit. They're going to be profitable and equity rich. But 3 to 5 years from now, it's a different scenario. It's like, okay, well, now we've got all this capital. What do we do with it? It's a good problem to have. Don't get me wrong, but I'm not sure if I'm answering your question, Sonia. So
No, it's a good question, and I think it's a good answer in terms of kind of the vision and where you believe you'd be. It's no one has a crystal ball.
yeah,
I would say the conversations that we typically have are more on a year to 2 year schedule, right? Here's where we're going for the next 2 years in terms of the raise, where we're going to be, going. So Marco, I know you have a hard stop right now. Kevin, let me just answer this question real quickly, if you don't
yeah,
mind.
he's already answered it himself, but yeah.
Correct. Yeah. So Kevin, 5% bonus on a 200K investment. That's correct. Yeah. So it's a $200,000 investment is, for 3 years is 15% annually. That 5% of 200,000 is a $10,000 bonus. So at the end of those 3 years, receive your 36 payment, receive your principal back plus that $10,000 bonus. Correct. Yeah.
Perfect.
So yeah. Well, listen, guys, I know we've got some hard stops this afternoon. Thank you for joining us. There will be a recording of this. It'll be sent out likely within the next 40 to 72 hours. Keep an eye on your inboxes. Keep an eye on your spam folders. If you don't get a copy of it, let us know, and we'll see you on the next one. So thank you, Marco. I appreciate your time.
And you too, Nate. Thank you.
All right, take
See
care.
you.
Bye-bye.
Take care. Bye-bye.